Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here, and I don't have the desktop audio on anymore, so now I can turn my music on and not destroy everyone's eardrums. All right. Welcome, welcome, welcome. Hopefully everyone is able to rest up, get ready for the day ahead, and all that fun stuff. As always, before we jump on the left side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. All right. Just a quick note for you all before we jump on in today. Please keep in mind that the YouTube broadcast does have between a 5 and 30 second delay, depending on where you're logging in from, which can definitely impact the timeliness of what I may be talking about. So just something to bear in mind. I also just wanted to take a second to give a shout out to our latest members that joined overnight and yesterday and earlier this morning. Thank you so much for the support. I'm pumped to have you on the SSFTG fam. If you aren't a member yet, you have a few different options to check out if you're looking to further your trading education and career. Here on YouTube, you can check out the join button below the stream. YouTube fan gain access to the extended hours trading room, which continues the morning session on from 10 until like 10:30, 11 o'clock, whenever things start drying up. Every member gains permanent access to the Discord chat server, and of course, you get the awesome badge next to your name to show your support here on YouTube. It looks really cool. To understand our trading approach and what I'm doing every day in the room, look no further than the Day Trading Academy. Listen, this is serious trading stuff, right? I mean, when you're looking at trading as a career, this isn't a lightweight PDF guide that you're going to finish in an afternoon. It comes packed with 19 plus hours of course and study material, including homework and review, if you choose to use that option as well. So you best tuck in. And then finally, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to our non-delayed stream over on Zoom, covering the entire morning session from 9 to 11 to ensure that you're on the fastest connection possible, and so you don't have to miss any beats along the way. Alongside that, VIPs also have access to our monthly VIP webinar, which I believe is next weekend. Private VIP events, one-on-one scheduling access. The list goes on and on, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you here trading alongside of me today, analyzing these crazy markets. Let's take a look at some news, take a look at some charts, see what's going on for today, kind of give us a heads up as to what the market's doing and what's in store. Don't forget, grab your morning DP levels. Those are posted for the major 7 markets that we are looking at for today. Those will give you a good heads up as to what to expect, as well as a visual kind of representation of where those levels are, so you can gauge if they are in zones of interest. Looking at the news calendar, we had some earlier OPEC monthly reports at 7 o'clock this morning, and then tentatively, we also have Redbook at 8:55. There's not really a whole lot else going on this morning, though. Looking at the 10 o'clock news, though, we do have a couple things happening today. Jolt's job openings for March forecast is 7.5 million. That's at 10. That'll be the first big one. The next one will be at noon, mostly for the energy side of things. EIA short-term energy outlook likely have an impact on crude oil. I don't really watch natural gas or any of the other ones, but those will also be on that list, so you kind of have to keep an eye on those. 10 o'clock, though, that's the time that we have to keep our eyes on. So we'll keep that up there. All right. Looking at the NASDAQ and seeing what's going on so far, we can see that we are down almost 1.5 DPs. The market's getting crushed. Big movement to the downside and a lot of selling pressure working its way lower. The buyers tried to hold the market up, and, well, they failed. It's fairly obvious by now. We had that really aggressive attempt at the lows, and it missed. We broke another high. We know the situation here. Trends, this is what they need. We've got that L4, L5, preferably. Reversal off of the bottom. Check mark. Break a new structural high. Check mark. Higher low. Check. Nope. And then it just kind of gave up the ghost and rolled all the way back over. So the buyers tried. We can see they tried. Otherwise, these wouldn't have stalled here. But geez, just got absolutely annihilated all the way to the downside. And now we are sitting back near 13,000. I would still like to see it go another 1,000 down to the 12 area, but we are also talking about 12,800 in the bigger picture. We might have some, things of interest going on. As it stands, the market is obviously downtrending and working in it. Sellers are assumed to have control of it, but we're starting to get a little overextended. If we start racing away through the bottom, usually, like always, when we snap away from the moving average cluster too far, there's usually a reversion back to the mean. If we look at the distances more recently from the moving average to the peak distance was 2.74% up here before it snapped back. The peak was 1.75%. It didn't really go very far away there, but 0.68 didn't really go very far away there, but 1%. So where we are now, if we look at current price movement, we're at 2.25%. That's about the same distance that it was over here. In terms of overdrive valuation, a lot of sellers might be looking to kind of ease off the gas pedal and take some profit down here. If sellers are taking profit, well, they're not selling. Maybe a bigger correction. Over on the S&P, which again is definitely the stronger of the two as far as bullishness is concerned. At the moment, we're still seeing these higher lows. Insane as it is, we still have the higher lows going on. The only caveat to that is if we narrow it in a little bit closer, you can see the original break. I mean, it rolled back up to a new high and then collapsed all the way back down. It just looks like they're kind of hunting for a better support zone. Realistically, it's so shallow I can't even draw it. Let's see. I mean, we're getting close, 41.25 in that area. Either way, this is a deep pullback market. If we look from the low to the high, they're pulling back very obviously L5s. If we go from low to high, we're back at around the L5s again. This is a zone where swing longs will be looking for the market to stall. They don't want to buy the falling knife, per se, but if they can show some signs of reversal or consolidation or something, that's a perfect spot. Because right now, the S&P is actually down -2. And -2, you've got an extremely high probability that the market closes above it. That does not mean it will, but it's got very good odds of closing above 41.30 by the end of today. Tell that to the people who were buying yesterday's drop, though, right? So it doesn't work all the time. Over on gold, big cycle off of the highs and a fairly obvious rejection off the top. They just couldn't break through those 1845s. Big ramp to the upside. That was the NFP numbers. And like we were talking about, the highs of that and the lows of that are going to be a major zone of resistance and support until they break away from it. Sure enough, axis resistance. We come back inside it. And, well, down it goes. Next objective is going to be back down to the low of that NFP move around 1817-ish. That'll be the zone of support in terms of areas where if it is going to pull back, that's going to be where it wants to do it. If it breaks through there, though, that's where we've got a little bit of a cause for concern because there's nothing to hold it up until we get back to 1795. We'll see what they're able to accomplish, though. Crude oil overall cycling with, I mean, technically speaking, we've got the higher low, definitely L5, new high. We've got I believe that was an L. Was that? Didn't it near miss the L3? Or no, it bounced directly off the L3 3 times. All right. Once we roll back up to the highs, buyers are back towards that L3 again. It's a very similar repetitious type pattern. We've got 3 little pokes down here. So if we see some trapping and some reversal mentality here, this could be the start of a repetitious move back to the upside. Very similar to what happened before on, what was that, April 28th down to May 1st. This is taking a little bit longer, but almost identical. On the euro, attempting to break through the highs. Attempting is a real loose term, though. That is a rough attempted breakout on the highs. Pretty gross. Not a whole lot of continuation above the top, and fairly obvious that the market is looking for maybe a deeper move. Buyers don't want to buy the high. That's fairly certain. So what we're going to be looking for, deeper pullbacks. 21,200, 21,300, somewhere back there. If you look at the overall cycle off of the lows, it was an L5. So it is viable, although it's tiny. We've got the continuation back to the upside. Typically L5s like rotating off of L2s. And if we go along the cycle, I don't think we've had one yet. No, we haven't had an L2 yet. And that could be why this is having such a difficult time, because buyers just haven't had enough time to load up. So if it does pull back, that's the hot spot down there. We'll just say 21,200 is the epicenter, kind of in the middle. Major zone of interest. Over on Bitcoin, continuing back to the downside and pulling back towards the lows. Cluster of support around 55,000. That's the zone that continues to hold. Still bouncing. Still looking good. Buyers trying to drive it up. Obviously, there are some concerns. We had that higher high failure all the way down, but they held a higher low. We've got another higher high, barely. Now we've got to see, can they hold the higher low? See what kind of repetition they're able to get going here. And then Ethereum finally pulling back. First time in a while, but this is one of the first times that we've actually broken down a major swing low after kind of reaching out to the highs with a quick little flush. Right? I mean, that we did get a nice two-legged correction back, and that was the first time they broke. That obviously went insane. The second time around, fairly obvious that buyers are still happily buying those swing low pullbacks and dips and all that fun stuff. So buyers very interested in continuing the market back up. We do have some undertow forming, some divergences across the top that are still suggesting a further pullback. I would still love to see Ethereum dip back down to the 3,000s. We'll see if it can get there. All right. Looking on the daily for the NASDAQ and working in from there, we can see that we were able to close not only underneath 13,453, but look very, very close. Well, this stupid line's too freaking thick. It closed below the bottom of L2 as well. So not only did it close below everything, but it also closed below major support. If this were a 500 tick closing underneath it, okay, you know, big whoop. It might just bounce right back up. But this is a daily. That takes a lot of effort to close down through that many levels and keep it at the bottom. So this is that deep pullback that we've been talking about around those 12,820s. That's that huge zone of support, and today could very easily reach out and get something like that. And that would also be an L4 reload for buyers. So this pullback down here, let's try that again. 12,820. This is going to be psychotically large because I need to have my head outside of my backside. I need to be able to see that level, and that cannot be hidden. So huge zone of interest when we can start cycling down there from the daily perspective. And it's fairly obvious that, you know, right now, buyers, if they were trying to buy high, getting that continuation back up, they got dumpstered and they could not get out. Never gave them a chance. The only traders who were able to get out were the buyers who bought the patient dip back to L1 with confirmation. Once it broke underneath them, still gave them a chance to get out of break even, which they used very aggressively, obviously. So now as we continue down into the 60-minute, the 60-minute on the cliff gives us an idea of kind of what exactly is going on here. You can see this massive rotation, nice sideways, and it just obliterated the lows. Buyers tried coming back up and then down again. If there were any confusion that the sellers were taking over in the short term, this kind of sealed the deal. That was the nail in the coffin. So if we can get a rotation back up, if it does rotate higher, even if it goes screaming higher today, it's more likely that we find resistance back up in the 800s to 700s as a more of a swing area. Now, while the market's dipping lower, if we look back at that last congestion zone, had a major swing high and a major swing low that plotted inside there. Let's see what kind of volume node we're dealing with. Okay, that kind of helps refine the area a little bit further. We've got another one at 12,960 that might act as short-term support and resistance. I'll just make this one green, but that's off the 60-minute, just ahead of that previous L4. We might be able to find some bounce off of that area. Looking good to the downside. As far as bearish momentum, we'll be able to see it a little bit better on the 15. Zooming into the hill now, we can see that bearish move lower. And man, what a crazy little flip-flop they had going on here. So if we go backward and we look back at this previous move up from the low on the 4th to the high on the 5th, they still had that bottom-weighted POC. And that was sort of the concern, like, well, you know, if this is going to continue higher, are buyers going to ramp this back up? And sure enough, they defended it and ramped it back up to a new high. A lot of that new high was made on NFP, which I think is some of the problem here. But when we draw this further forward, they never made a new low. So technically, this is all still part of this potential pullback if you zoom out in a downtrend. So right now, that puts their potential average, again, these are assumptions, but these are all that we have to work with right now. If these were buyers, they were long at around the 13,550 area. And that makes sense. I mean, it's fairly obvious zone of just accumulation, nice build volume, POC in the middle, great spot. So if the market can return back to that area, that would be a very interesting spot for sellers to push back down. You can even see a little inside rejection there already. Adds a bit more emphasis. So far, these moves down have been pretty aggressive, but eventually we'll get a deeper correction, and that's likely about where the market will probably want to find a top, somewhere inside there. It doesn't have to be exact, but in that area. And then zooming into the much faster and kind of seeing where we're at as we go into the open here. We've got about 12, 13 minutes or so. Well, hello, Shiba Inu. I didn't want to see you, though, at least not right this second. Good to see you. All right. So we've got the overall big move to the upside. And the thing that's kind of standing out here is I want to see on this move higher, how are they responding? So far, the POC has been at the bottom. So if sellers are taking this, they haven't done it yet. Oh, well, ask and you shall receive. There's the POC shift. Golly, 13,100. 13,100 POC shift. Sellers trying to, or will be trying to get it back underneath that. Realistically, from our perspective, even though I do want a short, I'm not going to be able to take a short until it gets back underneath that. And it's the same POC as the last pullback, 13,100. I wonder, because those are stacked up so close together, they might have to creep a little bit further up. And that's a bottom-weighted POC sitting at 13,115. Okay. Back underneath it. This is this is an incredibly strong bull leg to the upside. I don't necessarily want to be the first one to the party, but they are demonstrating some resistance here in the 100. Sellers are attempting to build. And if it does rotate down from here, that's a great average to have. All things considered, right? It's just the way it's moving kind of, makes me a bit nervous. Divergence on the 15, yep. Now we're breaking above this area at the 13,100s. On the S&P, there's potential to backfill some of this action at 33, 34, 35 for scalpers to try to press back, to try to press back down. Jeez, oh Pete. That'd be the zone of interest. I mean, incredibly strong breakdown move. If we look at the zoomed out from the Asian session to the Euro session, I mean, it's fairly obvious. Big dive to the downside, and it's continuing lower. A lot of times when we have the Asian and Euro session so massive, it's going to have a little bit of a hard time keeping that going because so much has happened already. More often than not, the US session ends up going into a range, which kind of sucks for us. But hopefully they can keep this going. I don't want to deal with that. I just kind of feel like we're coming in late to the party. All the action happened without us. Well, unless you were up at the time. See if we can get a bit more momentum back to the upside again. From the larger trend perspective, obviously this thing is just cruising to the downside. The overall high above the Asian session is there. That was a deep pullback to an L3. Continued lower after the L3 to an L1. Lower to an L2. Missed. Finally pulling back, and we're at the L1. Tested 33, no fill on the S&P. Okay. And it's already dropped 2 points off of that, too. All right. I'm going to cancel the short on the S&P. I just didn't get filled. There's nothing I can do about that. It's really irritating, but there's nothing I can do about that. Hopefully someone maybe was able to make that work. To the tick. NASDAQ still finding a halfway decent bit of resistance inside here. Sellers are going to be attempting to try to get this back below the 13,100s if they're going to take it down. In the short term, this is a pretty strong move back to the upside, and this is kind of the reversion to the mean. It's healthy. It's good for it. If it's going to continue the bear trend, at least. Hey, good morning. Welcome. Or afternoon or evening or whatever it is. $13,100s is kind of the hot spot. We formed a double POC cluster there on the previous pullback and the most recent. Bears attempting to churn back down just a little. The S&P nearly morning again, yeah. Back down to 13,100s. Now, earlier shorts were obviously in that area. The question now becomes, are they nervous enough to where they begin exiting their shorts? The first time it tested it, it couldn't get through it. That obviously demonstrates sellers or buyers of some degree coming in defending that 100. Very curious to see if they can drive this back down a little bit further. Time is it? We've got 4.5 minutes until the open-ish. Ooh, big push back to the downside for the sellers here. I'm willing to give 33 one more shot given how weak that last bull bar closed. If we do have candle gapping to the upsides, which there is actually, wow, that's going to make it invalid. I've got to wait until the candle gapping at least succeeds or fills or gets out of the way. And that's up at 34.75. So I like it in the 33s, but honestly, 34.75 just makes more sense. Still demonstrating support off the 13,100s. That's why you got to wait for those areas to break. Hard to go short when they're still buying, you know? Finally testing that 33 area. See if sellers want to reject back off of this. That's the earlier zone that hit me to the tick. Couldn't get a fill. Missed the move. They're back. This time it went through it. So those sellers for sure were given a shot. And they would have had their targets filled, so it did work. We've got 928 right around the corner. Careful. There's a lot of volatility that happens at 928. They couldn't get underneath 13,100 again. We at 928 got a little bit of a bump in volatility. They tried closing underneath the 100s. Popped right back up. S&P 3475 is that zone. This is when volatility starts kicking in. Hi, S&P. Hit me to the tick again. Drop 2 points off again. Oy vey, you are hurting my feelings this morning, S&P. I cancel again. I just didn't get a fill. Back to back. Why? 30 seconds or so until the open. I, once again, did not get a fill on the S&P, and it backed off of that area by about 2 points. I obviously missed my 1 point scalp. $35.50 is another zone of potential short-term interest. That would be on a volume retest going into the open. So just be careful and understand the time of day. This is when things get a little bit crazy. Ooh, yeah. All right, well, if it goes all the way back up now, I don't want it. Jeez. Sellers took it back underneath that 1150. See if they can get a quick push back to the upside. I need them to at least get up into like the 10s, like somewhere up there. That's a nice sell bar. Sellers may be trying to get that move going. I just want it back up towards the 11, 10s, 12s. Okay. Nice little pop up into this area. I didn't get a fill on that first portion. Jeez, oh Pete, this thing is lightning round right now. We're starting to climb up into that L1 area of interest. $34. All right, I've built up into my normal size for the swing to the downside, but the objective now is a little bit looser, just to get back down to these 1150s. I want to see what happens when they get back down there, but if I have to bring my average more towards the Euro session lows, that's fine as well. This whole market is definitively bearish. It's just the morning is seeing a bit of bullishness. I'll draw my average up a little bit further. Jeez. All right, well, I'll utilize that volatility to my advantage in the short term here. Because that might very well be a trap before a rally back to the upside. Very nice bear bar. But again, given the back and forth and the aggression that we're seeing from the bulls, I'm lightening the load in logical areas. If it wants to blow off through the bottom, there's enough volatility here where it's not going to take a whole lot before this thing's plus 70. But keep in mind, it's not going to take much before it's negative 72, so you got to play it careful. Nice continuation down towards the moving average cluster. Great drive. See if they can keep it moving back down again. But if they start failing above those 38 quarters, then I doubt sellers are going to want to try to stick around for too much longer. Looking at the new high and drawing that up there. It's still 1150, no change. Whoa, there's a lot of wicks happening on the top here. See if we can crush down through that 1150. That's that big volume node. Come on, NASDAQ, drop it. Blam! Holy crap. Beautiful flush to the downside. Jeez, right back into the volume node. Everybody jump ship. Whoa. Holy crap. Back down again. This volatility is nuts. It hasn't even been 5 minutes yet. Still have 20 seconds for the first 5-minute bar. Whoo, lordy. 1150s is going to be another area of interest. Sellers have now just tried to regain proof. Uh-oh. Back above it. That could be a problem. S&P at 31.25 for potential continuation to the downside. Bouncing back off that volume node and cracking a new high once again. It does mean that this measurement can continue. 1150. We already know what happened. It's obvious. Oh, jeez. S&P already got the target. This immediately scalped out. Good lord. What is happening? Hello? Golly gee willikers, Batman. We've got ourselves a vicious day of volatility. Yes! Oh, hang on. Before I forget, I'm getting wrapped up in the volatility here. The first 5-minute volume is a big tell. Gotta have that on there. 25.75. First 5 on the S&P. $34.25. Bulls are attempting to ramp back to the upside here, and obviously sellers have lost their grip. We already know what happened. A lot of the sellers jumped ship on that pullback to 1150. This incredibly fast flush, if it gets one to the downside, like it would look insane to be a buyer. That's the one that I want to be a buyer on. but I want to see it just get crushed to the downside. Yeah, there's jolts at 10, but I mean, this is I don't know. I don't know what would cause this amount of volatility. One news announcement, doubtable. It's a combination of a lot of things. I mean, the market's opening up on an incredible pullback. If you're looking for, if you were long, we're now breaking underneath a lot of structure. A lot of traders are running very quickly. There's a lot of fear, and that's what we're seeing in this volatility. And remember, as more volatility comes in, more people who are looking to scalp come in, or more people who don't normally scalp start scalping, and that adds more to the volatility. It's just a compounding thing that keeps going until it finally slows down and people call it a day. And as more people call it a day, the volatility goes slower and slower and slower. Same thing. Right now, the volatility is incredibly high because likely everybody's trying to scalp. A quick little dip, speaking of scalps, underneath the most recent bull bar would be a zone for scalpers to try to get a pop back higher. $61.25, 62, somewhere down there. Hey, how's it going? Man, what a wild ride. Come on, NASDAQ. I didn't get the one. I got the other, though. That might have to be it. Yep, that's it. It's right up to the target again. I'm glad I hit the button twice. Jeez. Wish I got both, but at least I got the one. Beautiful dip back to that 61.25 for a continuation bounce back to the upside. Easy peasy trend continuation. First 10 minutes now behind us. S&P rejecting 34.25. That's that first volume node. Zooming out to the significantly larger picture. The major zones of interest that should jump out and slap you in the face. Specifically, 12,820. But 12,960.75 is another one. We'll see if they can get there. I mean, we're talking some serious moves if we get that. That could also be a big portion of it is FOMO, right? A lot of traders want to jump on the move. Maybe they missed it, and you know how it goes, right? If you rewind this a little bit, you're like, man, look how bearish this market is. All right, well, let me go back a little bit. Look how bearish this market is. Man, that's really nice. It's 1 a.m. I'm gonna go to bed. You wake up and you see this. Well, I usually wake up at 4 or 5. So you wake up and you see this, and it's like, whoa, man, okay. Well, it's a nice continuation of the downside. I want to try to sell here, but maybe do I really want to sell here? This would probably be the best spot if I'm going to be a seller. Maybe I'll sell and then drop the kids off at school or something. It gets the rotation back down, and it worked out if they did. But that's at 4 a.m. Not many people do that, right? So a lot of traders might have missed the boat, and you come in to the open, 9 o'clock, 8 o'clock, 9 o'clock, 9:30, and it's way the heck down here. You're like, man, let me just give me a pullback, please. They start slapping into the L1. Doesn't work. I thought this was a downtrend, a stupid thing. And then what happens when they come back? When they see weakness, they get out of break even. Sellers tried defending the top of it. It worked for them. Rinse and repeat over and over and over again. Not that sellers didn't try. It's just in a little bit of a hard time. So FOMO could definitely be part of it. But that's also, we're getting a fairly decent pullback right now. This is a nice little pop. On the 15 over on the hill, if we look at that's a heck of a move down. But if we look at that move down, for a trend continuation, yikes, that POC's way up at the top? That sucks. All right, well, I mean, this thing's going to have to travel 7.5 miles to get up to that zone of interest, but that's going to be it up there in the 265s. That's a big spot if it gets there. And you can see I'm playing off of each of these levels, which is why these levels are so incredibly important to keep an eye on. You got the L1, major rejection off of it, failed. What happens when they fail? They go to the next one. The top of L1. Holds. Where does it go? Lets the first ones out. Breaks. Breaks up to where? L2. Comes back down. Gives the top of the L1s a chance to get out. Now we're breaking above the L2. Didn't even show up to the party. Still gave him a chance to get out. Now we're at the L3. This thing's just going and going and going and going. We've obviously got a bull trend now in the short term. It's raining missiles we get free from Gaza. Jeez, yeah. Stay safe out there, man. Your sense of humor is like mine. It's very facetious and morbid. But, you know. If it seems like the bright light is coming towards you and it's not choosing a direction, maybe run. Okay? Yeah, leave the laptop. It's okay. Hey, volatility's here. Yeah, no joke. This thing is screaming. Bulls have more of a continuation breakout on the S&P, breaking above not only the RTH highs, but also breaking kind of above that previous swing top, so. Oh, I feel you. I totally agree. How do you get in this now? Was the question. I hate the hold your nose and buy days. I can't do it. And I don't blame you, because you have to have some fairly high risk tolerance and a couple zeros in your account to make it work. And you know, if you do, then more power to you. That's awesome. Then go nuts and have fun with JP Morgan and all them. But when we're in this type of scenario, if I wanted to be a buyer, we've got to really zoom out and we've got to look at the context. Where is the market going? If I'm let's say a perma bull, which generally for the U.S. equities and anything that tends to continuously go up, it's hard not to be. If I want to be a buyer, but I'm looking to buy the dip, we've got to find where could the dip be. If we go back to the daily chart, because that's where this pullback is really starting to show its legs. This isn't just an hourly pullback. This isn't just a 15-minute. This is a daily pullback. This thing's got some move. Well, the one thing that stands out very obviously would be utilizing the, what is it? Control Shift 2? I never remember the key. That's what it is. From top down for a measured move. Right? Well, a measured move, I don't know what the heck the other lines are. It's been a minute since I've used this. We've got this first black line, and then the second black line is the measured move, and we just bounced off of it. Not only we just bounced off of that, we just bounced off of the lowest moving average cluster and the L3 and the retest of the earlier bull's entry point on that initial rally to the upside right there. This is also the beginning phases of where bulls were accumulating from the last time, although it was only near the top. The accumulation peak didn't happen until down here. It's got a little ways to go. So if I wanted to be a buyer, that's what I would need to wait for. We're in a great zone. They're showing some solid support. But in the faster term, now that we're seeing this potential wick on the daily, then you're going to have to go into something closer like the hourly and see, are we actually getting a bounce? Right? I mean, if we look at this right now, do you really want to be a buyer right this second? It feels like it's really low. This is one of those hold your nose and buy opportunities. Yeah, it might work. The probability is terrible. You can buy here, but the only way to compensate for the poor probability is to go for a major reward target of like back to the highs while only risking here. That way you're at like a 4-to-1, so when you are likely and inevitably wrong on trying to pick a reversal off the bottom, it doesn't hurt too bad. And if it does work, it pays very well, right? It kind of covers the difference. The safer way, and the way that's generally a little bit, I don't want to say easier, but simpler, is letting other traders, letting funds, letting all of them put their money to work so you don't have to. Let them put in a bottom, come back to the moving average cluster, and this might take a while. Keep in mind, it's a 60-minute chart. Put in a higher low, reverse back up, get another higher low. When it starts failing around here, whether it's at a new low or a higher low or whatever, that's the spot of interest. But that doesn't happen until way over here. So in the near term, regardless of how badly you would want to be a buyer, I still have to look at this and say, hey, I want to be a buyer. And if I am a buyer, that's okay, but I'm not going to stay in the party for too long because those seats could potentially get incredibly expensive. Just like back here, right? These buyers are trying to buy the dip. They got a nice bull bar. They'll jump in, but you can see how fast they're getting out. Look at all these wicks. They're like, oh, it didn't go in one candle on the 500 tick? Nah, I'm good. And then they just start bailing. So it's here again. Really nice little dip back to the moving average cluster. Buyers try coming in. It doesn't go in one or two candles. Everybody bails. They're not hanging out very long. They don't have a reason to yet. It's early to the party. Nothing wrong with early seats. They can be very good. Some of the best. But they can also be very expensive. Those backstage passes come at a cost. Have to learn to... Oh, for sure. And, I mean, keep in mind, this is something that you, along with everybody else in the trading world, will struggle with forever. It's just a human thing. It's hard to let winners run. But once you start realizing the probabilities and how things play out in the long run, it becomes a bit easier where you become dissatisfied with trades that are going wrong or negative, and you gain a whole lot of patience for winning trades. But there's that balance, because if you give it too much patience, then you give the whole thing back. So it's definitely a fine line. One of the ways, especially from a scalper's perspective, because I feel you there, from a scalper's perspective, a good way to stay in a trade a little bit longer, even though it might take you out at a worse price, in fact, it probably will, but sometimes you can get really nice runs out of them, is just utilizing a stop. Place a stop underneath the market and just trail the stop up manually. Every time there's a nice little pop, lift the stop a little further. Nice little pop, lift the stop a little further, and just keep going until it takes you out. That way you're still kind of utilizing the short term from the scalper's perspective, but if it really goes on a tear, which like we saw over here, it drops, I mean, what was that, like 70, 80 ticks in seconds? A minute maybe? You allow for those to happen too. And it's also keeping you active. So by forcing you to pick up the stop and move the stop and click and put it down, and it's kind of keeping you still in the game, and it makes it harder for the human element to come in and mess things up, you know? I don't want to call myself a scalper. I put stops too close. Usually when I try that, taking out right at the worst stop. Yep. And that's the thing with scalping. And side note, the only reason I'm kind of going in that, just kind of shooting the breeze right now, slow. When you're scalping, think of scalping as the opposite side of things. When you're scalping, you have to pay something for that increased probability, because that's what scalping is. It's high probability trading. So if you're going for high probability trading, you have to give something for that. It doesn't just come for free. There's no such thing as a high probability, high reward, low risk trade. That doesn't happen. That's not the real world. And if there is, an algo already traded it 17 times by the time you figured out that it was there. It's not something that we're going to be able to actually utilize. So with that in mind, we have to have a bit of a trade-off. If you're going to be utilizing high probability trading, the trade-off, the give back, is risk. If I want high probability trades, then I have to risk more. That would mean that if I'm buying, while the market's pulling back, say I wanted to buy here. Well, if I want a high probability trade, I'm not going to put my stop right underneath that low. That'd be stupid. That would be a low probability trade, which, side note, there's nothing wrong with. That would be more of a swing trade. You're going for like a 2-to-1, your typical type trade. Scalpers aren't going to look at it that way. They're going to look at it from the perspective of, all right, I'll buy here, but where's the last time we had structural support? It's down here. That's where my stop is. You got to be able to stomach that. Now, what makes it significantly easier to stomach that is the extra zeros in the account, being able to build in and modify where your average is and profit on smaller moves. That's why scalping is so incredibly difficult with smaller accounts, especially because not only is it difficult to find the right locations, you have to risk a lot, but you don't have any flexibility of building in. It's all the wrong punches in all the wrong places to try to make work, you know? Bulls still rallying back to the upside. Yeah, I have a whole video that goes over the probabilities and all that too here on YouTube. Somewhere. We've got more continuation back to the upside. NASDAQ's big zone of interest, 265s. That's going to be the area where a lot of sellers are going to want to hold off. Keep in mind, 7 minutes until 10 o'clock news. We have Jolt's job openings. We haven't even had any news today, and the markets act like it's been nonstop news. Yeah, for sure. And as always, if you have any questions, just let me know. That's what I'm here for. More continuation back to the upside on that last pullback. Now that we do have confirmation that it was a successful pullback, the majority of the buyers place their averages around the 199s. So from their perspective, if they go up, they have, did they just, to the tick, they're 2-to-1. So that's why we've got some resistance here. It's a 2-to-1 actual. Makes sense. Let's see if we can get a little bit of a pullback. The S&P is just plotting barcodes now. Yeah, I did see the new Venom 2 trailer for Carnage. Oh, man, that looks cool. I like it. The graphics. Could you imagine being a kid these days with these graphics? Whew. Back when, like, Terminator, when I was a kid. Man, look how real that looks. You look back at it now, you're like, oh my god, what is that, claymation? Actually, Terminator and Aliens were still pretty good for their time, all things considered. Just don't rewatch, like, the old school animatronic Teenage Mutant Ninja Turtles. Oh, it wrecks every happy thought. For contrast, how would you recommend trading for a small account? Great question. Small account trading, generally speaking, is something that the majority of traders are going to have to do. First off, the mini is not going to be where I would recommend starting. The mini on the NASDAQ, even if you're starting with, I mean, honestly, even if you're newer and you're still not, down in the sense of being able to at least maintain break even over a period of time, if you're still trading in the negative, then realistically, it doesn't matter even if you're coming to the table with 100 grand or 100 million or 100 billion. You should still be trading the micro. As long as the expectancy is still negative, there should be absolutely no monetary commitment, or if there is, it should be very little. Now, once you're able to at least maintain a consistency of break even or positive, then staying on the micro is still a good recommendation because it allows a huge amount of flexibility. But there is a point where, like, if you're trading 10, as an example, if you're trading 10 contracts on the micro, then commission's going to be just not worth it. Anyway, that's down the line. So understanding your risk tolerance, right? And knowing that ahead of time. It doesn't have to be exact. Remember, this is trading. This can be dirty math. And side note, I'm not going to be looking for any more trades for the next 4 or 5 minutes until news hits. So we'll go into a little more depth on this one. So when you're looking at a smaller account, first off, you have to know your risk tolerances right out of the gates. So let's say, as an example, a $1,000 account, if you're trading micros, right? So a $1,000 account, or maybe you just got your stimmy, in the mail. I don't know what that was. Was it 1,600 or something? I don't know. 1,600. There you go. And at any given point in time, I don't like it when there's a risk of higher than 5%. And generally, half of 1% is a much better place to be. But when you're trading a smaller amount, then you don't necessarily have that flexibility. Sometimes you do. So I'm just joking. We'll use 1,000. At 0.05, that's 5%. That gives us a $50 risk. Pretty easy math, I know, but just so you can see it. So we've got a $50 risk, which really at $50 risk at 50 cents a tick, that's a 100 tick stop. I mean, that's... I don't know of a swing trade that really requires a 100 tick stop unless you're way out in the stratosphere. On the 500 tick, I mean, most of them are like 30 or 40. So that means that within that 30 or 40, knowing this base number at 50 ticks, I can have 100 contracts. If I have a 25 tick stop, I can fit 2. Easy math, right? Don't go overboard. Just make it so you know that it's easy math for specific numbers. So that way, if you're looking at a trade and it's got a 10 tick stop, I could fit 10 contracts in there if I wanted to, technically speaking. I don't know that, again, volatility on the micro NASDAQ, maybe not, but that would be something to potentially consider. Once you've got your risk locked down and you know what you're looking to do, that's where you can narrow into these specific areas. So let's take a look at the 15-minute as an example. The 15-minute area, this is a zone that I want to see as resistance. Now, the market's screaming up to it right now. So maybe right now is not the best time in the world to short this, but just for example's sake. All right, let's say that I did want to short this. Well, if I were shorting here, where's the next logical point of interest for me to put my stop? There's this little bitty swing, which I guess, but talk about just begging to get slapped in the face. The next one would be above this, which again, I guess. The next one would be here, I guess. The problem is it's just so far detached. So I have to ask myself, do I really want to short here with kind of a meh stop? It's a possibility. But if I'm going to be doing that, then I have to understand that my probability is bad. So if my stop's above this swing high over here, and my entry point is right at this line, what I need to ensure is that if I'm entering here, I need to make sure that this solid green line, which is my 2-to-1, that it's inside the lows, which in this case it is. It fits. So this is a viable trade. If I were going to short this completely blind, right, not paying any attention to what's happening, no context, nothing, just, hey, level, slap the sell button, and place your stop and place your target, this would fit. This would do what I would need it to do. The probability is bad. I know the probability is bad, likely 35 to 40%. This trade realistically has a 2-to-1 to the bottom. So mathematically, from the math equation side of things, it fits. It's okay. It's long-term profitable. It's net gain. Now, if I can modify this a little bit and get a 3-to-1 on the inside, and this is why I use the fib tool for this, I just drag my line up, my entry point, and now I can see my 3-to-1 line is here, and that would mean that if I wanted this for a 3-to-1, knowing that the probability is really bad and trying to decrease my risk as much as possible, I have an optimized entry that I could utilize there. Hasn't hit yet, and you might not get it. But if you were entering short there, your stop would go above the highs. You already know the math. From there, you just have to figure out how many contracts you can trade. Right? So from there to there, it's percentages, because, it didn't, good old Murphy. So 271 ticks. Golly gee willikers. Okay, so... Lordy, 271 ticks is beyond that stretch in this case, so this one wouldn't fit that risk tolerance. Golly, man, I wasn't expecting it to be that high. I was thinking it'd be like maybe 60 or 70. I thought it was going to be under 100. Well, okay, anyway, that's the process that I would take on every single setup, even though it didn't work in this case. That would be the mentality. I would load up the trade. I would look at the area that I want to go to. Where's my optimized entry? Where's my targets? I can get a 3-to-1 down to the lows if I take an entry here. I know I don't have the flexibility. Right? So what you have to be flexible in, and this is where the difference comes in. Traders who are trading with one contract have a flexibility. It's just kind of an unseen flexibility. The flexibility in trading with one contract is that you have to force the market to chase you, not the other way around. Your flexibility is in your entry point. The perk of being able to trade multiple contracts is I don't have to be as picky about my entry point because I can modify where my entry point is on an average. With one contract, though, you got to be picky. And if you're looking for a specific area and it misses it by 2 ticks, which you've seen me do a couple times, or it hits it to the tick and I don't get filled, oh well, it's nothing I can do about that. There's a reason why I'm that picky about it, because that's where my probability is in my favor, not somewhere else, there. And if I don't get it there, I don't want it. That's where you get your flexibility from a singular contract trade. But you have to have a multifaceted approach in that you're utilizing an optimized entry point, which we just kind of discussed, and you're also utilizing a high reward versus risk, 2-to-1 at minimum, never less than that, and generally more than that if you can get away with 3-to-1, especially on the NASDAQ. When it's got that volatility, you can hit them, but at least 2-to-1. And it's strict. You're in with a stop and you're in with your target and you just leave it alone. Let it do its thing. That's why I say it's simpler, but it's also very difficult because you have to be the one that puts the brakes on entering too aggressively. You're the one that has to say, no, I don't want it here. I want the market to chase me. That's hard to do. Easy to say, really hard to put into practice. We are past 10 o'clock news. That is beyond us now. Just for reference, the JOLTS job openings came out at a positive 8.123 million versus the forecasted 7.5. The previous was 7.526, but that was revised from 7.367. All right. We are after 10 o'clock. That means that we are going to be going into the extended hours now that we have the news and all that stuff out of the way. And let's see if we can get some more scalps going on. Yesterday's extended hours was pretty fun. So that's going to do it for the morning session. As per the usual, today's recorded on YouTube. You can just rewind it and go back and you can see it from there. But that'll do it. Enjoy. Rest up. If I missed any questions, feel free to shoot those to me. For you members and for you VIPs, well, you VIPs in the Zoom stream, you don't have to do anything. You just sit tight. For the YouTube members side of things, look for the join link I posted yesterday. So you might have to go back in the community tab to find it there, but it'll be posted there for you. So enjoy. Rest up. Thanks for trading with me this morning. Hope you all had a great one, and we will see you all tomorrow morning, right? Have a good one. We'll talk to you all later. Thanks.